Ever wonder if you could retire in the 0% tax bracket? Curious about strategies to keep more in your hands? More of your hard earned money in your pocket for your retirement? Do you know your Social Security is taxable? Hey there, I'm Jason Berquist, the owner and founder of retirementofyourdreams.com. Today we're kicking off how to put in place the 0% tax bracket. Part 2 of our 3-part video series on money expenses to create the retirement of your dreams. Today we'll cover 1, how to manage your taxes, 2, how to maximize your Social Security income, and 3, how to cut down on taxes for W-2 or 1099 income. Also, if you missed part 1, click here to catch up. Before we dive in, let me introduce myself if we still need to meet. I'm Jason Berquist. I empower individuals and families to create the retirement of their dreams. I've been in this industry for over 20 years, so I've seen a lot of the ups and downs in the markets. My whole goal is to help educate people, empower them to understand how to set up the retirement of their dreams and bring hope back into their lives. I realized this was my calling back in 2010 when I was going through a divorce. I was really at a financial low at that time, and I realized I wasn't practicing what I preached. I committed right then and there to practice what I preached, and I became an independent financial professional and a certified financial fiduciary. This experience allowed me to always do what's in the best interest of my clients. Now I work with a team of experts to empower you to create the retirement of your dreams. Again, we're kicking off part 2 of our 3-part video series, how to put in place the 0% tax bracket. This is all about money expenses and how to create the retirement of your dreams. So let's jump right into it. Number 1, how to manage your taxes. Understanding taxes is a bit like figuring out the different buckets where you stash your money. This is a conversation I have every day. And yes, even with my son. He worries about moving up into a higher tax bracket as he makes more money. Sure, earning more money means paying more taxes, but it's not as complicated as it sounds. Think of taxes as buckets. There's a marginal tax rate, and you only pay taxes on the dollars that fit into those buckets. But for today, let's zoom in on these buckets: tax later, tax never, or tax never again. Now, who wouldn't want to be in the 0% tax bracket? Our goal is to pay the least amount of taxes possible. My mission is to find legal ways for you to pay the least amount of taxes. Now, let me share a story about Jim and Heather. When we first met, they weren't putting any money into their tax-free bucket. Our goal was to fix that. If you keep putting money in your tax-deferred bucket and you keep pushing those taxes down the road, Uncle Sam will catch up to you, and eventually you will have to pay. So how do you fill up the tax-free bucket? There are options like Roth IRA, cash value life insurance, Roth 401k, or your Roth's plan at your employer. The crucial decision is when to pay taxes, now or later. It's a balancing act. Some want to lower taxes today, while others want to make more money for immediate investments. So what is your task today? What are your tax today? To figure this out, schedule a call with your retirement of dreams expert. This way you can explore all your available options. Whether you're self-employed or work for a company, we'll find the right plan for you. Let's strike that perfect balance between what goes into your pocket today and what fuels your future investments in the future by paying the least amount of taxes. Number 2, how to maximize your Social Security income. Have you seen my other videos on this topic on my website at retirementofyourdreams.com? If you haven't, go check them out. Today, we're just going to barely touch on Social Security. Social Security is a complex subject, and I can spend hours talking about it, but I'll share just a couple key points today. Did you know that your Social Security is taxable? Seems like double taxation, right? But it is taxable. Since you've already paid taxes on the money that went into Social Security, how could they tax you again? But there is a way to make it tax-free. Your Social Security is considered income, or at least part of it is. To keep Social Security tax-free, you must stay below standard deductions and income limit options. Now, don't worry if this sounds a bit confusing. The crucial thing is to figure out how you can get your Social Security tax-free and what we can do to help you figure that out. It's a plan everybody needs. Despite debates about if Social Security is going to be there in the future or not, we must work with the information we have right now. Let me share you a story about Eric. He didn't realize there were actions he could take today to influence his Social Security benefits in the future. You need to examine your current plans. This way, you can understand the income streams taxed during retirement. What if you want your Social Security tax free? You can't show earned income while receiving Social Security. How do you do that, you might ask? Well, let's set up an appointment with one of your retirement of your dreams experts and let us show you what we mean. This, among other considerations, need to be discussed. Yes, yes, you can get your Social Security 100% tax free. How does that sound? But depending on the income you show, the IRS could count 50% or even 85% of your Social Security income as taxable income. Doesn't sound fair, does it? Want to avoid this? Give us a call. Keep in mind that these details might change, but it's essential to grasp these concepts now. Okay, teaching point number 3, how to cut down on taxes for W-2 or 1099 income. Let's unravel the secrets of saving on taxes for W-2 or 1099 income. Understand the various investment options is key, whether you're under an employer's umbrella or self-employed individual. For those with employers, you might want to be familiar with employer-sponsored plan, or even you're interested in looking into a solo 401k for self-employed individuals. What if your company doesn't offer a 401k? You can set up a solo 401k or consider SEP IRAs or SEP Roth IRAs for self-employed. When dealing with 1099 or W-2 income, it's crucial to explore the different investment vehicles and comprehend how to fund them. You must discern which ones offer future tax breaks. While it might be tempting to enjoy tax breaks today, it's essential to consider what you might sacrifice for your future. We only know what we know. And if we are unaware of certain options, we can't leverage them to our advantage. That's why meeting and discussing these options is crucial. Now let's talk about employer plans versus individual plans. When you contribute to an employer plan, such as a 401k or Roth TSP, if your employer matches that, it's contributing to the traditional side. That really means there are two accounts. You're contributing to your Roth tax never again account, but your employer's contributions are going to your tax deferred or pay later account, which means you got to get a tax benefit today, or you think you do. But what's going to give you better results in your taxes in the future? Almost no employers match a contribution on the Roth side. But if they offer a match, they will still match regardless of where your contribution goes. Your Roth contribution cap is $6,500 or $7,500 right now per year, depending on your age, even if you contribute to your Roth 401k as well. If you contribute to a Roth employer plan, your limits align with the employer plan, such as how much a 401k allows you to put in, $23,000 or $30,000 per year, depending on your age. This still leaves room for you to contribute to a personal plan like your Roth IRA or traditional IRA without any restrictions. I recommend you seek advice from one of your retirement of your dreams experts. Your current plan of action could involve and should involve identifying which options apply to you and the plans that you have. We can discuss and determine which plans are most fitting for your situation. Let's sum up what we've explored today. How to put in place the 0% tax plan. Part 2 of our enlightening 3-part video series on money expenses to create the retirement of your dreams, which has included 1, how to manage your taxes, 2, how to maximize your Social Security income, 3, how to cut down on taxes for W-2 or 1099 income individuals. Now, we barely scratched the surface with these. So you need to get with us so we can understand your situation and give you those options. Now that you understand the pivotal role of the 0% tax plan in realizing the retirement of your dreams, I extend an invitation to you to gain more insights. Click the link below and schedule your free retirement of your dreams call. Stay tuned for part 3, where we'll delve deeper into the intricacies of money expenses. We'll explore how fees affect your retirement so you can choose the best options. In the meantime, watch my free video below to discuss and discover my 9 steps to the retirement of your dreams blueprint. Thank you for considering the retirement of your dreams as your financial partner on your financial journey. I'm curious to know what was your biggest takeaway from today's video. Please click the link below and share in the comments. I'm Jason Burgess, dedicated to empower you to create the retirement of your dreams.